88.50, which means to me we are fragile. So we might peak at 91, but that's not what the current price action is telling me. It is currently higher high, higher low, higher high, and then potentially higher low. Intel is broken. It is matter of the fact. What do you have? Don't go blind. Don't imagine things. There is no beautiful women here in this chart. Okay? It's a beautiful chart, but no beautiful women. Boom. Pound yen, same situation. Higher high, higher low, maybe peaking, maybe not. Who knows? Who cares? It's still continuing higher. It has gone up to the previous high. That might be the peak. And then if you invest 100 pips in it, you might lose or you might win. That's about coming down to your strategy, come down to your. If you try to trade in this direction, what happens and what you're supposed to be doing? You're supposed to be trading down here. Well, did I do that? No. Personal reasons, I didn't do that. But that's where I believe that's where I am most confident. So if you think that up there is going to be a great value for money, okay, cool. All right, cool. Then continue if you're a trend trader, if that's what you're going to do. But this one should continue until Jesus returns or until we make it low. Until that then. NATO, how are you? I'm very great. Good morning, traders. Good morning, Chris Pulver. Happy to have you around. Can speak pound yen is a strong resistance. What about fundamentals? I don't know. Notice here, I can talk to you about resistance, but yet again, I'm talking to you about what I just talked about for probably the past 20 minutes. Is strong resistance isn't resistance until it makes a new lower low. What do I mean? Is I'm just trying to debunk something here. Is that where you think, for example, this is strong support, but it was broken. This is strong support, but it was broken. This is strong support, but it was broken. It was strong support, it was broken. You can shout wolf, wolf, wolf. This is strong resistance. It might be the resistance we're waiting for. It might be the peak we're waiting for. But we don't know until we have, in my eyes, have a new lower low, have declared exit rules, whatever your exit rule is, or your clear, what do you call it in English? Your clear rule of not engaging anymore. That's all that matters. Because I still see trend higher. But I don't know what has happened in the previous 10 minutes that may send this one lower. But until then, it doesn't really matter because don't go blind. Don't become too afraid just because you see something. Go by facts, go by rules, not emotions. And have fun, maybe. Is pound yen strong fundamentally? Absolutely yes. No, okay, I'm thinking about it. The yen is weakening because of the lack of increase of interest rates in Japan. So it is strong for now. Economic data doesn't apply to yen, apparently. Hi, Brokena. Glad to see you as well. Even though American indicators are cooling off, I think S&P 500 is still going to go bullish. Yeah, those are not necessarily opposites. Slowing in economic data for the economy, yes, is not great as long as they still publish profits, but that also equals to lower interest rates, which means less costs. So less demand, less costs, you might be equal out of it. And in the end, as long as you don't have a bubble or a crash of some sort. All right. Yeah, if you want to take over Chandler. But yeah, cool. So my mind is look for pullbacks on yen pairs, which you're currently having. Look for dollar pairs yen pullbacks if you get it. This one didn't give you. S&P 500, in my mind, Chris might be disagreeing with me. I think it's going to go higher for a bit longer. But until if it makes a low, it makes a bearish trend. Great. I'll take it.
Hello, Ivan.
Hi.
we're going to move the show along to our next segment, but I want to thank you so much for coming on when you did. We like having you on. So I've been putting Ivan's link in the chat. So guys, go click on that. It takes less than 3 seconds to subscribe to him, and then you get all of his content that he puts out when he's not over here with us. He's also in our VIP Discord, where he does exclusive webinars in there. So check those out. There's a lot of high value stuff. So Ivan, thanks for coming on.
Thank you very much for having me.
All right, we'll see you next time. Okay, guys, we're going to move along to our final segment of the show today. We're going to have Chris Pulver on, so stay tuned right after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Tuesday. Welcome back. Just getting started for the morning. We had consumer confidence came out, gave us a little bit of a down candle. Price was fairly quiet. We just were shy of the all-time highs right here from Thursday last week. We opened up above yesterday's high, but we also took out with price action yesterday's low. We've actually turned the week red for right now, and price seems to be going a bit lower. Now we're only about like 0.4, 0.5% of movement right now. There's a 0.53% high to low. That actually will reflect in today's price action. I mean, if we open up here, now it's going to read from yesterday's close, and so it only shows like, oh, we're only down 0.3%. But what we see from the open to rip right now, we're about 0.5% to the downside. So you can see we've got some red in the S&P, some red in the Nasdaq. The Dow is flat. The Russell is flat for right now. I'm going to continue to monitor a couple of positions. I took a SPX trade this morning. I'm out of the trade with a small loss. It's trading at 380, 370. So it's actually down about 70 or 80 cents. I'm monitoring this one because I want to see if my decision to exit the trade early for a small loss was the right call. So far, it looks like it is. But I'll monitor this because if price is going to do something along these lines, if price were to stabilize here and then work its way back up into kind of the close from yesterday, then that initial SPX trade is going to be just fine for profit. The other thing that I'm going to be monitoring today, I posted this in my alert section for futures. Here is a trade with the ES. It's a 0 DTE, or it's an expiration for today. And here's the trade. So I'm looking for a profit trap. I started out the trade right around here, around 57.85 to 57.85 to 57.90. Price has fallen below that. So what I'm looking for is by the end of the day, if price just stabilizes and comes back into my profit trap, then there's a potential to make like $200 to $300 a contract here. If it closes lower, then I'm going to lose about I think $190. So it's, if I lose, I lose. If I win, hopefully we see price stabilize and come back into the profit trap by 3 or 4 o'clock today. So that's one trade I'm going to continue to monitor. We will see. And then I'll watch the SPX trade as well. I did get some chart alarms going off in China stocks this morning, which I think is a good thing. So here's my SPX position. I'll keep an eye on that one. So China, let's take a look at FXI. I had a big gap to the upside. I did a roll on FXI. Let me get my tracker here. So tracker FXI. Where was that at? Allocation. Diagonal spread. I closed out for profit already. Here we go. So here's my tracker. I know the numbers are small, but I have a break even at 24.26. And then I went to a $29 call. So let me double check that here. And we're trading at 29 and change already. So is that all that I have on FXI? Let me see if I have any other exposure. So FXI, let's go all accounts. FXI, have some shares, have them covered. Got a naked put at 23.85, got them covered at 29 bucks. I may roll this, I may not, but bigger positions are probably in Alibaba, which I have some shares. I have some credit spreads. I have some ratio spreads. Right now, Alibaba is up around $10,700. Go to Baidu. Right now, Baidu on the day is up 37. I'm still down in the net position, but my break even on Baidu is actually in the low 90s. I have a lot of these Baidu trades covered, covered at 115, covered at 130. Have the 80 by 50 bull put spreads, 90 by 80 bull put spreads. These all are looking much, much better for some profit. So that's kind of the extent of my exposure. I also have JD.com. Let's see if JD got a rip to the upside as well. So let me watch this one here. So JD.com, we're trading at 32. Ooh, nice. What do I have on JD.com? It's right here. Have some shares. Have a long call. Let me see. I'm going to check and see what the I kind of put the same campaign trade on for a lot of the accounts. So I've got a 13 by 32. I think I might be taking profit on this one. 13 by 32 for $14.78. Now let me see what this is trading for right now. 17. So it's only one contract. It's maxed out around $19. It's trading for 17 right now. Is it worth watching JD go up like crazy? I think I'm going to take the profit. So let me see. I don't know if I want to. I don't want to roll this necessarily. It's already trading for $17. So let me figure this out. Just doing a little portfolio management. So yeah, if it's above $32, get called away for $4.22 a contract. $14.78. So I've got a $14.24 debit to a $14.78 debit. If it's taken out right now, $17.61. Let me do the math on that. So my max profit would be around $19. So if I get 17.61, max profit at 19, I'm making about 92.6% of the profit if I take it today and I don't have to wait until November. That net position would be, if I take it for 17.60 minus the debit at 14.24, make 336 a contract. So little profit action there would be totally fine. And then I can reestablish new positions, which I'm probably going to do. Let me see if I can get, let's try to get 1762 out of this and close this. 1762. Not filling. Let's go 1760. Not filling. The mid's trading at 1736 apparently. Okay. Well, if that's the case, I'm going to sit on it a little bit longer. I'll come back and check on this one. But what I might end up doing is putting in some fresh trades on JD.com. So this one, same thing, a 13 by 32. A 13 by 32. I'm also way farther out. I didn't realize that I went out to like 2026 on this trade. This is a December. This is an 815 day expiration. So I'm way out long on JD. So yeah, I guess I should try to roll this then. Let me see what a roll looks like instead. All right, before I can save that later, but P&L's up on the day. That's fine. I'm going to continue to monitor price. I'll watch my ES trade, watch my SPX trade. Everything is okay. Gold still up. Let's just do a little spot check on everything here. So SPY sitting up here near the highs. I'd said last week after we had the Wednesday close and the Thursday push higher that we're probably going to deal with some indecision in this area. Bears might threaten somewhat, but not necessarily break below the FOMC lows from Wednesday. And then, bulls, of course, would be, if they're threatening, they're making all-time highs again, which is a good thing. We did have a pretty decent miss in the U.S. consumer confidence report this morning. Forecast of 103.9 came in 98.7. So that is, 5.2 points off, which is a pretty big whiff. But we did have some beats before that. I think the market got a little excited with, we had a previous print of 103.3 and then forecasted 103.9. So unfortunately, that was a miss, and price is kind of reflecting that right now near all-time highs. I did take a look at the AAII sentiment report this morning, which I know is also in your Edge Finder. As of last week's close, we're showing about 50.8% bullish, 26.4% bearish. The 1-year bullish high is 52.9, which was in December. There really wasn't much of a pullback from December to January. From 2023 into 2024, the market barely pulled back. It was like a 1 to 1.5% pullback in January, and then the market ripped like crazy. However, we also printed a similar high. It was actually not quite 52.9, but it was getting above 50 when we had the top in July. So it's a little bit on the high side for bullish sentiment. You can use this a lot of times as a contrarian indicator. And then I went to the CNN Fear and Greed Index. Market momentum is showing greed. Stock price strength showing extreme greed. Stock price breadth showing extreme greed. Put call options, greed. Market volatility, neutral. Safe haven demand, neutral. Junk bond demand, extreme fear, which I thought was interesting. Which I don't think this is true necessarily, because this says extreme fear, but the spreads are actually relatively tight. If I go into JNK, we're actually making higher highs on JNK. So between JNK and continuous jobless claims and initial jobless claims, those are the things that would be potentially the data points that I would think can kind of trigger the sell-off. If credit spreads or junk bonds get wider, then that means this instrument goes lower and goes sharply lower, like it did here back in 2022. Deleveraging started in 2021. 2022 was pretty much a steady bear market for about 9 months. And then we stabilized. Even the dips we saw this year in April, it went down a little bit and then stabilized. Even in July and August, we went down and stabilized. So we're not seeing any real outliers here. Price obviously is going to move with that. So if you see this instrument going lower, you're going to see the index prices falling with it. So it's not like you can see this lead and then the indexes fall with it. If that does happen, that's even an easier signal to be potentially, bearish, but typically they're going hand in hand. Okay. All right. So let's talk, get rid of that one. I was looking at putting on some trades with adding some exposure in DIA, probably adding some exposure in SPY. Russell, as much as I want the Russell, and I hope that it still gets there. Look, I want the Russell to catch up in all-time highs. I think that'd be a nice little milestone for 2024 to see that the SPY hit all-time highs many, many times, as did the Nasdaq, as did the Dow. And let's see if the Russell can do the same thing, because this index would still have about 10+% to get to those highs. I'm looking at over 11% from current price to get to the all-time highs. So there's some catch-up space in the Russell and small caps. The issue is it's 2,000 stocks, and maybe 200 of them are performing well, and the other 1,800 are not. But I just don't want to go into like this narrow concentration when the Dow and the S&P are performing better and the market breadth is spreading. I mean, you get 500 stocks in the S&P that have gone from Mag 7 to, semiconductor plays to then broadening out into utilities and energy and other sectors. Where did everyone know that NVIDIA is no longer the top performer of the year? I took a screenshot of this morning. Okay, does anybody know what the top performing stock is this year? Don't Google it and look it up. If you don't know, you don't know. Okay, the top performer this year is Vistra Corp. It's an energy play. It's up 180% year to date. NVIDIA is still up 134%. Constellation Energy Corp up 118%. Aerospace up 80%. Targa Energy, NRG Energy. It's funny. It's like you say that, it's just redundant. But it's Progressive. Of course, you're getting dinged on car insurance and home insurance. Good luck. Progressive. They're freaking commercials. Anyway, that's your top 10 performers for the year. So it's NVIDIA is still hanging in there, but NVIDIA was dethroned as your top performing stock. It's really being replaced by energy. You've got the utility plays doing really well, energy doing really well. So thought that was pretty interesting. All right, let's move on. Volatility index. We're still in the teens. It's nothing that I'm really thinking we need to be alarmed about. I will be long volatility. If we come down to 13 or 12, I'm getting long volatility through the rest of the year. I'll put on a trade That's probably, again, hypothetical. Let's say we hit 13, okay, 13 or 12.50. I will probably get long with like a $15 or $16 call, maybe even a $20 call, and just throw it out there towards like end of the year Q1 and any type of vol event, trying to get that thing to turn in. Maybe I can turn $1. I'm not drawing that very well because it's yellow, but if I get a trade that is a dollar call option that all of a sudden rips and we see, $7 to $8 a movement, I get some value that maybe lets me trade that $1 call option and close it out for $3 to $4. That's a pretty good return on capital. So anyway, that's where I'm at. ASTS, not sure what that is. Let's take a look. Space Mobile. I don't really know a lot about it. I see history back here into 2019, coming off of lows into the dollar space. I mean, this is probably something I'm not going to trade, but it was up 1,800%, which is pretty exciting after the fact. Doesn't really do me much good now. But if I look at the stock itself, let's go to check out the fundamentals. So ASTS, Space Mobile. Highly volatile, does not have meaningful revenue. Shareholders have been diluted. Let's look and see what price to sales, price to earnings look like. Price to sales 3,000 times. Price to earnings -29. What? Current price $26.61. Fair market value $1,000. I don't know what I'm going to do with that. Is it optionable? I mean, you look at its competitors, peer average 7.3 on price to book. This is 29x versus an average. So it's 4 times the valuation. Let's see. That's crazy, man. I've never seen. I have not seen fundamentally something that's looking to be this type of ridiculous price. But it's already up 1,800%. I mean, it's not expensive. If this stock ever is going to $1,000, I guess now's the time to buy it. But I don't like this trade. I don't know. I don't know why we went from $2 to, $40. What does this stock even do? Building broadband cellular network in space. Okay. So is that actually helping like on Earth broadband? Or is that like everyone that goes to Mars or the moon gets ASTS cell phones? I don't know. So, I mean, if it's optionable, maybe I do something with it, like a naked put. There's options. So how about a leap? How low can I go? It's trading at 25.96 right now. I could go all the way down to 750 and say, yeah, sure, give me a $1.45, give me 260. There's obviously risk on the trade, but if I was willing to say, okay, I'll take shares at $10 and 750 and even $5. Okay, let me get rid of this one here. I mean, I could generate $500 of income, not taking a single assignment, and have this stock, over the next year go up. Like, that's not a bad play. It only ties up about $380 of buying power. If I take the shares and assignments, I mean, I don't know if there's any liquidity to add covered calls. Let me see what that looks like if I add covered calls. So if I did something from current price, if I did something 30 days out, hang on a second, bro. Let's see what a 30-day to 38-day covered call looks like. At the money, it's not bad. I mean, getting $3 to $4 for a covered call, you can definitely do some quick cost basis reductions. So I would say that you've piqued my interest, but I have little to no interest in buying it now. So yeah, I mean, a 10 to 5, if I'm going to own some shares, 10 to 5, somewhere in this ballpark. And if this is going to amount to anything, then perhaps either I collect the income, price goes higher, and I turn $5.74 credit. I could probably take 50 to 75 to 90% of that credit without ever having to wait to expiration. If price goes higher, if price goes lower, I'm essentially expressing I'm willing to take the shares, and my break even price would be something to the effect of, let's go out to that January expiration. So if I take shares at, let me do the math here. So if I get assigned at 10, I get $2.60. So that's a 740 break even on that tranche for 100 shares. If I do the 750 minus $1.45, that's 605 break even. And then for $5, that'd be a 4.35 break even. So if I add those together, 4.35 plus 6.05 plus 7.40 by 3, I'd own the shares at $5.93. So the risk is the stock goes to zero and I lose everything in it. So if I own 300 shares, if I did one contract each, I did 300 shares at 593, I'm out. Let's say I'm multiplying that by 300. My max risk would be about 1780 with upside that could be, pretty ridiculous. Even if there was any assignment in this area and we go back up to this high from 2024, break even at what, 593 to recent highs that we saw around $40. I mean, that's that's an 8x return. So max risk around $1,700 and make over 10. I mean, it sets up for a good opportunity. The problem is I don't have a lot of history on it, and this is a fairly new company. We're headquartered in Texas, 2017. I think what I'm going to do is I'm going to do just a bit more exploring, because what I don't love is this: does not have meaningful revenue. So where is this company getting its financing? Right? Like right now, I mean, to get into the tech space, to have no meaningful cash flow or no meaningful runway for cash, not be profitable, all this shows is trading at below estimated value, earnings are forecasted to grow. If this is a story stock, there's risk there. I don't know. It's tough. It's certainly not quality, but I'd say the space race is on, and who knows what that develops into. Maybe this is all a big wild tech play. Maybe Tesla or SpaceX buys AST Space Mobile. I have no idea, but something that would be worth. I mean, would I throw a 0.5% risk at it? Sure. So that's probably what I'll look to do. I'm going to do a little bit more digging and see like what are the pros and cons. But right now, these premiums are pretty solid. I know I'm going out a long time here, but if price goes up, this $527 is easily going to become, a $2 debit, $1 debit. Like it would be very manageable. Okay. And YouTube user says, we don't actually know if their satellites will work. Correct. And that's why whatever you do on this stock would be a risk. So like I said, quality, probably not the best play. Opportunity, you never know. So I just wouldn't want, I don't know. I mean, it's up to you if you want to take that risk. So I think we can put a pin in that one, come back to it, but I'm going to write that one down. ASTS. It's not bad. I want to see what else is kind of lumped into, like what type of, space and in the story of the space race and whatever's being developed out there. I mean, if it's like satellite, like if it's broadband for space development to help us here on Earth, there's maybe a little more functionality. But if it's all like, no, they're just building networks for the space stations or building networks for, the billionaires that are going to space. I mean, that's probably good for billionaires. I don't know. Who knows? I think the reality is you got to be comfortable taking risk. And if you are, I would like to own it at 593 and see if I can survive the stock. But if it's a buyout target, you never know. All right. So let me keep going here. Dollar. We're still stuck in this noisy zone in the dollar. It doesn't want to go anywhere. Currency strength chart for today. New Zealand dollar on top. We got the Swiss, the dollar, the yen on the weaker side. We do have some risk off flows. New Zealand's been stronger. We saw this yesterday. Yesterday, the euro was the weakest currency pair, and New Zealand's on top. Today, it's yen, dollar, Swiss, and New Zealand's on top. Let me check and see. Oh, nice. Got another couple of bucks on the old Swiss crosses. So my Aussie Swiss looking good, CAD Swiss looking better, Euro Swiss looking better. New Zealand Swiss looking real nice. Dollar Swiss, not so hot. It's the same. I'm upside down a little bit on dollar Swiss, and then the rest just chillaxes. Yeah, but the Swiss pairs overall looking pretty good. Okay. By the way, Swiss National Bank has a rate cut on Thursday. Expected to cut rates by another 25 basis points. I would love to see the old Swissy here go way down over the next maybe 30 to 60 days and see if I can start hitting some profit targets on my Swiss crosses. So I will keep an eye on that. Dollar index, though, still chop suey. We will see what happens. Let me check something really quickly here on SPX. Just going to check the trade from this morning. Getting closer to profit. Okay, I need this to get down to about 250. It's close. Let me check my ES trade. 255, 270. It's getting closer and closer. Price is coming back towards center price when I took the trade today, around 570 SPY or 5,700. It was like 57.15 on the SPX. We're trading at 57.11. So another 5 points higher. This will probably be profit. But I took the trade off with a small loss at minus 30 cents just to avoid. We did break yesterday's low. You know, it's just end up so far being a choppy day, which is totally fine. And then on my ES position, let's see if my ES, it's for this account here. 1, 2, 3. I'd love to get this thing just a little back into that profit trap. That profit trap would be sweet if we go somehow stabilize on the day. I need to check 57, 57.70, 57.75. Watching that price today. All right. That's on the to-do list. Oil, still hanging in there.
Hey,
Frank,
Chris.
how you doing, man? Ooh, natural
Pretty
gas
good.
popping up there.
How's it going?
Good.
So you're looking at oil?
Yeah, so I'm just going through natural gas. This might be one trade that gets a little interesting. Natural gas is a slippery son of a gun. I would love to see some natural gas back down to the lows again and see if this just takes time to build. And this is kind of what I'm hoping for, is this just builds and builds and builds, and then we have, you know, more of a eruption in natural gas. But I think we can all see a potential head and shoulders here. Left structure, center, right shoulder. If we break this neckline around $3, natural gas could have a pretty strong recovery. I don't know. I'm not taking the bait. I mean, we've seen this thing mess around with all sorts of traders, and it's a wild and crazy instrument. But just be mindful of a potential breakout. That I could see natural gas going higher. Are you long natural gas?
Oh, I have Occidental Petroleum. They do
me
oil
too.
and natural.
Oh yeah, speaking of, I do have to. Okay, so I did some work on Oxy yesterday at the end of the session, and I need to add in. I'm going to add in a very inexpensive covered call. So let me go to my positions here. OXY. OXY. So I have the shares. I have them covered at 54 out to October 25th. I believe that's just before earnings. Just before earnings. So let me check on. So earnings is November 5th. If I'm not getting it called away, let's see. I think what I wanted to do was this. If we go, yep, I've already got the trade already pending here. I was going to buy a $40. I was going to buy an out of the money put for 17 cents. It's going to cost me, I mean, it's not expensive. This is about $60 to protect 500 shares. And if price drops aggressively on Oxy to the low 40s, this should be trading for a decent amount of credit. So I think I'm going to do that on the shares that I own. So I think it's in that account and that account, that account. So all these accounts have the shares. Everyone else just has a little bit of exposure. But I'm covered at 54. I need to buy. I'm going to buy a $40 call for, let's see if I can get it for like 15 cents, hopefully. 15 cents on this $40 call. This would be 5 contracts. And this is for some protection. All right. So let's see if this will fill at 15 cents. Perfect. All right. 9732. You want it to come down?
Gold keeps running away. Yeah. I mean, if I had bought it yesterday, it would have been fine today, but that would have been chasing price. And
Yeah.
I don't know.
Okay. All right. Need to do a quick
some
update.
analysts say, like, if you chase price, like if you buy at the all-time highs in the past couple of years, it's worked as a strategy. But I just think it's so risky because then you have times like in late July on the S&P where we hit all-time highs again and then came all the way down for the next month.
Agree. I don't like buying highs,
It's
man.
always tempting. I did something though that's similar to that this morning. I took a bull put spread on the S&P, so it came down, and I took a 5705 by 5700 bull put spread. So as long as price stays above that, I'll be okay. The premium was 205. So
okay,
kind of hoping that it can hold above that level. And if price comes back up to these highs, like 730, 5730, I'll probably look at a bear call spread for something else. But, probably want to take it close to midday if price gets back up there. But if it's like 2 o'clock, premium's going to be pretty bad by then. But, yeah, I'm trying to do these 0 DTE plays. And I'm thinking the news week this week is pretty slow. So there's probably not a huge impact on things that come out because consumer sentiment came out. I don't really think that's going to drive the markets this week. I don't think GDP necessarily will next week. So I'm just kind of like looking at a range.
And what are we looking at here, Frank?
SPX.
SPX. Okay. I just saw that I had a pending order on JD and it was a max out at, I just got filled for 1760. I'm going to try to get filled. Let me check and see what accounts have. I don't know if this is in everybody's account, but I might need to do some profit management here. So JD, I have a 13 call and I'm selling against that a 32 call. So this one, and these are all puts. So the 13 by 32 closing for 17.60. I'll let that pend. 13 by 32. 17.60. That got filled. 13 by 32. 1760. All right. So this is just some profit management. I'm into these for like a 14 something debit. I'm trying to get out for like a 1760. It may or may not work. I mean, this is showing a mid price at 1690. So it max out at 19. I'm way out on JD. So I mean, if I close this out, I'm just going to redeploy and start kind of my campaign trade on JD over again. I'm just going to leave that pending. So that's pending. This one got filled for profit. This one is pending. 13. Okay, this one here, I'll close out 1760. I'll let it pend. That one got filled.
Just have so many trades going on.
Who, me?
Yeah.
Yeah, I mean, that's why the spreadsheet helps.
How do you keep up with all?
Yeah, I just have to track them in a spreadsheet. I mean, the nice thing is I just search for them. I mean, if I take a look, it's not that hard. I mean, I look at if I go through my portfolio A to Z, I have them all like, okay, let me check on this one. If there's expirations coming up or positions and P&L for the day, then I just go to my portfolio or my spreadsheet, look up this the ticker, and then I usually type everything out. So it's like, here's what I started, here's what I've done to the trade, here's my break even, what do I want to do? And it's just a nice little refresher. So it's not that difficult. But yeah, it's a lot of stuff. All right, so that one closed out.
Yeah.
All right, so I want to look at JD again. I mean, this is a nice big move to the upside, which I'm happy to see. I think what I'm going to do again is if I take a look at this, I mean, it looks pretty solid. We are trading. I mean, it's a China play. It's China ecom. So 9.9 price to earnings, 0.3 price to sales. Fair value $60. We're trading at 32 right now. I think there's a lot of upside potential here again. Question is, do I want to just own shares or do I want to, do some puts? I think the reality is I want to do some puts if it's worth my time. I don't want to tie up a ton of capital.
Why JD? What's going on with them?
Well, it's one of the bigger like ecom games in China. So I don't know if JD has something to do with the Shein and the Temus and stuff like that. I mean, maybe it does. But it just checks a lot of boxes on like basic fundamental analysis. I like the discounted cash flow model showing that it's. I mean, if we look at it from, let me take a look here on FinViz and go to JD, and we have a lot of cash. We have forward price to earnings. We have price to earnings. We have price to sales, price to book. We have little to no debt. Looking, and I want to go future quarter growth. So let's see, insider ownership. There's some institutional ownership. There's a lot. I know this is one of Burry's favorite stocks right now. In his
Why are they up 9% today?
So I think China cut rates. I think the big news is, let's see here, what's going on with Chinese stocks, Alibaba. Yeah, these are all. Let's check. It's something to do with like I think the PBOC just cut rates. Yeah, they're all up big today. I mean, I had a huge P&L swing. I'm up like 20 grand today on just China stocks. So let's see, stock gain after China Central Bank announced plans to slash. Are you long in anything like China?
86. I bought Baidu after its earnings.
Mm-hmm.
So I'm up now, but I think I got it at maybe it was 89. Might have got it at 89, but now it's looking good.
Yeah. I'm long long Alibaba, long Baidu. Those are looking good. So we have the PBOC announces plans to slash the bank's reserve requirement ratio by 50 basis points. Central Bank will also cut 7-day reverse repurchase rate from 1.5 to 1.7. Alibaba rivals Baidu, PDD, JD also noted upward movement in their stock prices Tuesday morning. Electric vehicles, including NIO or NIO, XPEV, Li Auto, also up. So I'm not in the China EV plays. I looked at them. They're okay, but I did like the SPAC stuff back in 2020, 2021 on EVs. They worked until they didn't. And I do think that in the EV space, like China's legit. I mean, they're producing so many cars and it's wild. I do wonder if the market share will be big enough, but I also wonder what Europe does with tariffs and imports, what the U.S. does with tariffs and imports. I think the U.S. is going to be a hard market to be like, yeah, we're going to accept, Chinese automakers when we've got Fords and GMs, Toyota, whatever is here in the U.S. that is just looking to. I know Toyota's a Japanese company, but I think it's going to be a tough market to crack when we'll probably tariff the crap out of any Chinese car that comes in here. Alibaba also teams up with NVIDIA to supercharge EVs for Chinese automakers. Like there's just good news coming out of China, and it's about freaking time. But we'll see here, like Chinese stocks defy Biden's auto import ban concerns, rally to 4-month highs, central banks unexpectedly slashes interest rates. So in line with the Fed, China's like, okay, we'll play ball. So I think that's just part of the big news is cheaper money, more accommodative central bank, and there's ways to express that. So I want to look at some fresh positions on JD. I've done a lot of credit spreads here and had, since we had the lows in the 20s, long calls have worked out nicely. I've taken profit a couple of times. Credit spreads worked out pretty nicely. Overall, my trade on JD, if I go to all the accounts here, I'm up like $8,000 on the year on JD with hopefully a lot more to roll into that. But I want to get some fresh positions on. So let me take a look. I'm definitely willing to own the shares. I want to see, maybe some here in like the $25 or $6 area. I could just add some shares now and then just dollar cost average in. If I just take maybe a $1,000 to $2,000 position, that wouldn't be bad. That wouldn't be bad. There's so much upside potential here. So if I did, let's say I do a $2,000 stake, and that becomes, I don't know, 2,000 becomes 6,000. It's not too bad. If I did 2,000 now, 2,000 in the low 20s, that'd be $4,000. Break even at 25, $4,000 becomes 12 to 13,000. So just thinking about maybe just buying some shares, but I'll probably express it first with an option. Let me see. So let me go to JD right here and look at the trades. So if we went out towards the 90-day window, could I generate some income? If I did, I can just buy some shares. And then if I really want to own some of those shares or said shares, where can I go? Let's go out to, I'm going to do a leap on this. I'm going to go out to September. It's a 360-day expiration. I can get $1.50. I'm going to do this, Frank. I'm going to go 27, 25, and willing to own 200 shares on my margin accounts. If price goes higher, then it's $400 that I'll probably take like 90% of the profit. If price falls back, then I could potentially take some ownership on those shares. That is a long ways out. A lot can happen, obviously, in a year. But if price goes higher with this bit of a melt up between the U.S. and China, if China actually gets its act together and we start to see some China stock rally, that's a good thing. But this is a nice way to generate some income. So it doesn't tie up a bunch of buying power. I'm going to go ahead and take this trade here. 27 and 25. These are sell puts. Hopefully I can collect more than what the bid price is giving me, 188 plus 1.62. So 350 is the bid price. I'm going to try to get $4 or better for it, hopefully. Let's find out. So let me throw this trade in. 27 and 25. That would be a decent discount, by the way. If I put in my first put at 27, $27 gets me at ownership. That's a 17% discount, 16.67% lower. I take the sale on that. And then if I buy some shares, I think I'm just going to throw in, I'm going to throw in like $1,500 right now. So everyone's going to get some love on JD. We're trading at 32.48. 32.48. Take a $1,500 position divided by 32.48. I'm going to buy 46 shares for everybody. So if I just go long the stock, go and buy 46 shares, 32.50. Okay. So everyone's going to get it. There we go. So $14.95 buying power. That's fine. Filled at 32.50. All right. 60 seconds. I'll have all these filled. Or it goes up in price and I don't get it filled. 51. All right. There we go. So 46 shares across the board. Next up. All right, dude. So I'm building a little campaign trade on JD.com and adding a little bit more to my China play. It's e-com, it's tech, it makes a lot of money. If the PBOC is going to be a little bit more accommodating, then that's a good thing. So I'm in for 32.50 and 32.51. I know it's in here for my calendar spread. Looking to get that called away. I'm going to add in kind of the new campaign here. So, all right, let's add to this. So JD there. Adding shares. Oops. And if anybody in the A1 Trading Discord in my section wants to add in some dollar cost averaging on JD, that's what I'm doing here. So I'm adding buy $1,500 position at 32.50. And then I'm going to look out a little bit further for that leap. If we go September 19th, I do a 27, let's see, 27, 25, 23. So I can get over $5 this is going to be a margin account. So let me switch this up here. So buying power doesn't take much. And if price goes higher, I'm just going to take about 90% of that profit. So $520 times 0.9, I'd grab a $468 profit out of that one. If price goes higher, that works in my favor very quickly. It might take, a month or 2 or 3 months, but if price goes way higher, that's an easy income play. But if I own the shares, obviously that's why I want to buy it, just to be safe, and I can take another stake in that. But for these margin accounts, I will probably be willing to own a little bit more. If I get assigned, what would that be? So that'd be 27. I'm sorry, I'm just literally talking out loud here, Frank, but I'm interested in
You're good.
taking some trades here. So 24.78 and $1.70. So 25 minus $1.70, 23.30. I'm just looking to see if I take some ownership, what's my break even? And then 75 cents minus 23 would be 22.25. All right. So if I took 300 shares, 24.78 plus 23.30 plus 22.25 divided by 3, I'd own them at 23.44. So would I be interested in owning JD at 23.44? I would say the answer is yes, because we have these lows at $21. I can certainly work some covered calls on that to repair it. So these trades are going in, my friend. 27, 25, 23, showing right now a bid price 2.30 plus 1.70 plus 0.79. So I've got 479 and we're trading for a 532 mid. Hopefully I can get 5 and change. I'm going to try to get 525. 525 survey says filled at 556. Even better. Nice. And then
PEOC only cut by 0.2%.
0.2%?
That's 20 basis points.
Oh, yeah. I thought they were cutting. I thought they cut 0.5, or maybe they hinted at cutting 0.5.
So this says this was 8 hours ago. They cut by 20 basis points to 1.5%. They were at 1.7.
Ah, okay. Adding sell puts. So if you don't want to own the shares, depends on if you have a margin or cash account, but I'm doing a $27 sell put for 2.34, a $25 put for 1.70, and $23 put for 0.98. And then the total fill was 5.25 credit overall. Look for 90% take profit if price rallies, or be willing to own at 23.44, which I am. Okay. So Frank, you want to kick around something while I type that all in? I'm going to get that in the Discord channel if you want to grab the screen and share something. I just want to get all this stuff posted. This will be in my stock and options portion of my alert section.
I'm trying to figure out what is going on with China, because it wasn't a huge rate cut.
Yep.
But
it's at least
an article about
it's better than nothing though.
Stimulus going on.
Yeah, it's better than nothing. I think that's been the missing piece in China has been they've done nothing. Like I've said this for over a year. It's like China to me technically looks really good. They are not growing with debt like we are in the U.S. And I feel like if they just do anything hinting at accommodation to real estate, to the tech market, then China can take off in a pretty big way and help the global economy. So anyway, that's why, I mean, I'm early. I get it. Like I've been in early. I mean, yesterday I said this early in my session. I looked at, P&L for the year and stuff, and I've had almost zero profits in China and almost zero profits in Bitcoin. And I'm up like, 16%, 15, 60% net for managed accounts this year without having 2 of my bigger campaigns actually like do anything. So there's been a lot of grinding, but it'd be nice to see some China take off, and that helps maybe boost my bottom line by, I mean, I don't know, man, I could probably get some China plays that boost my bottom line by 5 or 10%. I would not be
I
upset
don't
with that.
think that I don't think the government would necessarily step in and acquire a company. So like people are afraid of companies disappearing because the
I
government
know
can just step
everybody's
in.
everybody's
But
afraid of China.
what I think China kind of put themselves into this sort of environment. They kind of brand themselves as somewhat of a ripoff. So like I think a lot of their companies, like you think of like companies, Temu.
Yep.
It's like this very cheap marketplace where you can buy stuff that's usually way higher in price. So those types of things, I think, I guess, sort of make this brand for Chinese companies that you can get things for cheaper off our platforms, but they're actually really just terrible quality and they don't last, and they're not really what they market either. So I think maybe they've put themselves in their own hole. But I think companies like Baidu, Alibaba, JD, they're all good companies, but the China kind of gets them. They put themselves in a hole. I don't know however else to say it, but they're. I think people just think it's like cheap or a rip-off or something. But
Sure.
I don't know.
I had it. So I was
Stimulus.
at a dinner in Florida, and we had this conversation about Shein and Temu. What's crazy about the logistics of these companies is they can do something almost within a day or two, from like zero to concept to shipping within like 2 to 3 days. So what happens is, think about like the Taylor Swift Eras tour, where everyone's paying $500 to $2,000 to go see Taylor Swift all over the world, and one of her outfits pops up online, and in a week you can get it, and it's going to be like $20 to $30 instead of the thousands of dollars I'm sure that she's getting her custom outfits for. And the reality is, like, I don't think people think about it as high quality. I think people think about it as, I see that it's trending, I want that. It's like the instant gratification of retail, but their logistics are incredible. Where if they see something and they clone it and they ship it, you can have it within a couple of days. And it's like, to me, that's insane. And it's also like incredibly impressive. So I get it. Like, I haven't bought anything from Temu or Shein or whatever, but I see their ads everywhere, and I know that it's a legitimate competitor to Amazon right now. But again, it's like, are you buying it for quality? Absolutely not. Are you buying it for something that you could like have today and trend and then discard it? Like, it doesn't ever matter. It doesn't matter because it was a $20 purchase. A lot of people do that stuff. So I don't know. I just think it's interesting. It's certainly disruptive, but I mean, the fact that they can turn something from concept to fired up online to making it is really impressive. All right, willing to own, if assigned. I'm just finishing up my post here. If assigned on all puts, the break-even price is 23.44. All right, so let me get a post here for the picture of JD. I'm looking to own it in here. So I bought shares at 32.50, and it's already up a couple of cents, which is good. So $1,500 buy at 32.50. And then I'll get a little box in here for my 20. I did a 27, 25, and 23. So 27, 25, and 23 gets me some additional exposure there. And then a 27 by 25 by 23 sell puts for 5.25 credit. 90% take profit if not assigned. And willing to own, break even 23.44. And that'll be my picture for the alert. All right.
So
and also I noticed on my diagonal. Yeah, go ahead.
What is this? This is 3 legs, or are they all just 3 separate trades? 3 separate sell
They're
quotes?
3 separate trades. I'm just putting them together. I got filled on all 3 of them together for 525.
Okay.
Yep.
Gotcha.
So if you take them individually, I posted the individual like credit. So the $27 sell put filled for 235, 25 filled for. I think I got a little bit extra premium on that because I think they only added up to like that's 518. I don't know. We're gonna see. I'm gonna find out. So
That's pretty good.
overall credit. There we go. That's the same thing. All right, this one could be deleted. That's meta. Oh, fudge. Hang on. Sorry. Let me just add up the credits.
With that,
Yeah, go ahead.
I just have one more thought because I don't think there's going to be much happening this week. Other than gold, if it can come back, that would be great. I'd like to buy it. But S&P, so ever since I took that trade this morning, we recovered pretty well.
Yep.
Price is still steadily climbing. In the next hour or so, if we could get back up to 57.30, I might look to take a bear call spread. So kind of trap price where it is.
Okay. On what you want to go? SPX?
Yep.
Okay. So on my screen, and honestly, I hope price stays right where it is. If price finds a way to just kind of hang in here for the day and we have like a down to up, I'm right in my profit trap on the ES trade that I posted last night and this morning. So this is a good level for ES to hang out for the day. This should be, I think max profit will be around $200. So I was looking to make about $50 on the trade. If it stays in the profit peak and this has to be later in the day. Like this is going to be like probably 2:30, 3 o'clock this afternoon. But if we stay in this profit peak, awesome. If price finds a way to go higher, I still get about $50. If price comes into my trap here, there's $100 to $200 of max profit. So I'll keep an eye on that for ES today. All right, and then Frank, you want to look at you're looking at like a bear call spread. You think are gonna maybe come up and like poke the high and just kind of hang out for the day?
I mean, we'll see. I don't really know.
Okay. If you want credit, dude, for some of these credit spreads, it might be more risk, but if you look at this level for a sell call, or what were the legs you're looking at to do a bear call spread?
57.40 and 45, I guess.
Okay, so 57.40 by 57.45. Okay, so let's take a look at that comparison. JD got filled again for 1760. Okay, good. All right, I want to go to, so here's SPX. Let's go NDX. Because you could do this. I'm thinking on NDX. I mean, this is the not all-time high. This is Thursday's high. Maybe a 19,950, or I mean, I don't know. I'm curious on NDX if you get more credit. So I guess I want to look at both of them with you. So if we did the SPX trade. So for today's expiration, 57.40, that trades in profit. So that was a 295 down to 250 profit target. Is now decayed all the way down to $1.15. Came right back to center. All right, SPX, if we did 57.40 by 45, so you get 45 cents on it today. You're trading with about a 80% probability right now. I don't love taking the trade at 50 cents, but
I don't either. I'm trying to wait.
Yeah, if it were to let's say price were to flirt with it a little bit, and this trades for like $1 or $1.50, there's two ways I would think about this trade. If price comes up towards it, you can obviously get a little bit more credit if you wait and price actually gets closer to 57.40. The other side of that is if price comes up here and you move this out farther, you can still get that 50 cents and then increase the probability later in the day to grab, I'd say a higher probability 50 cents and have that trade less threatened. So like if the trade you're talking about right now is trading for, let's say $1, if it's trading for $1, I would even go up another couple of strikes and then take the 50-cent trade and see where the probability of profit is. Because it might be, 85 to 90% and you can still get $50 on the day, and that's a pretty good grab. So anyway, just thoughts.
So a seven. Oops, switch to puts. Hold on. So if I do bear call spread right now. Okay, yeah, never mind. It's still at 55 cents. Yeah, so I guess I'm just gonna be patient. I'm gonna wait and see where it wants to go. It's just a steady. It's a steady climb. And
It is.
If we get up there, yeah, I'm tired this morning. If we get to 7:30, then we'll see.
Okay.
I don't know.
All right.
But
I'm gonna set a chart alarm.
Time's running out.
Yep. Let's go SPX. I'll set a chart alarm at the high, 57.30. So let's see if we get to the high, and then check for Frank's bear call spread. I'll set a chart alarm for you. So for the rest of my day, I'm looking for basically my trade to manage is going to be ES. If it's in my profit trap, hopefully that will stay there. If it goes further up for the day, then that's easy profit for $50 a contract. If it's profit trap, then we're getting about $200 a contract. That's a pin price. That's rare, but if I get one, fantastic. So let's see what we get. That'll be
Nice.
here. So I'm just going to watch and see if it stays in the profit trap for the day. If it goes back down to retest the lows, that's no good. There's my risk, about $190. But profit trap 220 plus, and then $50 on the tail credit. So yeah, we'll see what happens. Overall,
I really hope it doesn't.
Price hasn't done much today. I would like to see price just kind of chill and do nothing and just kind of hang out. And for the day, it's a down morning up, and then it just kind of balances out, and nothing really does anything. Now I'm looking at live gamma levels. I do have a strike up here that's starting to fill up. This was around 300 this morning. It's at 633 net. So the 571 on the SPY could be tested today. That helps my ES trade. That drags the SPX higher. That might put your trade in the window of maybe executing if you're interested, Frank. So there's some gamma levels here on the SPX. The opening bell high was around 57.31. We do have a gamma level up here at 57.50, but I think we just kind of hang out, maybe in this area for here. We just kind of hang out for the day and maybe be about like choppy. So we'll see.
Would be nice.
So all right, man.
Okay. Well,
anything else? I'm just gonna go through the portfolio A to Z and just see what else I can do. It looks like I've got a lot of my JD trades closing for profit. The 1760 diagonal spread, it was a max of 19, closing out for 1760. I'm gonna double check and see how many of those got filled. So this one does not have any JD exposure. This one closed out for. So this one, where's it at? 13. Yeah, so that one closed out for profit. Right there. Very good. This one closed out for profit. 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 Closed out for profit. And boom, closed out for profit. Okay, so those diagonal spreads have been closed. Now I added in the 46 shares at 32.50. I put in additional trades with my naked puts, and the JD core position continues to run. Right now, up about $8,200 year to date on JD, and hopefully there's double or triple that to come. Could be longer, but I'm willing to sit on this stock until maybe $50 or $55. So that alert was posted in my stock options trades section. That was the most recent one. Willing to own the shares, $1,500 position at 32.50. Selling options for ownership if assigned. Put the legs in there, and then where my break evens are at. So if you like it, cool. Somebody mentioned up ASTS that I'm going to do a little bit more digging into. I also thought about putting in another kind of campaign trade with some, I don't know. I think that the Dow probably has most of my interest and the S&P over the Nasdaq. And I hate to say that because the Nasdaq has been by far and away the best performing index over the last 30 years, like not even close, but it comes with a lot more volatility. I'm just wondering, when we see the S&P utility sector leading the way, we see gold leading the way. I do wonder if we're like late in this cycle of like 2021 to 2022, like tech turned over first and then it took over everything later. But obviously tech can have like a last minute boom, and the NASDAQ does have room to get back to the highs. So I don't know, Frank, do you think they think the Qs are going to hit highs? I think they certainly can. I mean, S&P's at all-time highs, Dow's at all-time highs. They hit highs again. We're only like 6 or 8% away, not even 4% away. I mean, the NASDAQ can make that up in a week if it wants to. But yeah, we'll find out.
I can think of a million reasons why it shouldn't, but that would probably only reinforce the bulls to take it that high.
That's true, because it's the pain trade.
Blindly buy things.
That's it.
And it works out somehow.
Yep, that's what I'm going to do. I'm just going to buy. Just kidding.
But
yeah,
the thing I'm doing right now is like I'm trying not to risk it. I don't really want to be participating at like this euphoric level, and so I'm trying to do these credit spreads. So I'm like, okay, are we really going to go this low today, or are we really going to keep climbing today to new highs, and are we going to really bust through 57.40 or 50 today on absolutely no news? So I think that's just where I am, and just kind of establishing a zone and hopefully collecting premium and making money, even if we go up or down.
Yeah.
Just, I don't know.
Yeah. This is what I keep coming back to this. You'll see me reference this chart a lot for the rest of the year. This is price to sales historically since 1995. Any big crash that we've seen, we started to peak out here, crash. 2022, our bear market. It wasn't COVID. COVID was here. This was our price to sales, where we peaked out. So if we had a little bit more upside, there might be some more in the tank to kind of run those levels, and I definitely be getting a little bit more protective. I talked about the AAII sentiment report today. We're pushing a little bit high into the 1-year highs of the bullish sentiment, and that tends to be a bit more of a contrarian play. That was a crazy switch. Like from July to August, we saw that like 50 something percent on the AAII drop to like it felt like 60%, and it was a huge change within a week. And then the sentiment just picked right back up, and we're sitting here talking about this at all-time highs. So anyway, this is one thing I'm watching, and also the price to peak earnings, same thing. We're not as rich in valuation as we were back in 1999 when we had the dot-com bubble, which is where I think the tech market can go. So I mean, if we're talking about Nasdaq or talking about the tech market can maybe get through the 2022 highs and then get back into the dot-coms. But I mean, nobody knows how many points that equates to. I mean, we could see another, on the Qs, we could see another 10% higher. We could see another 40, 50, 100 points higher before we come into these like lofty valuations where it's like, okay, tech is now crazy expensive. But I don't know. I think it's if you're willing to buy it, I would say I like collar positions where if I was willing to buy it, I'd have like a $5 or $10 out of the money put and a $15 or $20 out of the money call, and I would collar the crap out of this thing. If it goes higher, great, I make more money in the upside. If it goes lower, we protect our downside to the best of our ability and lower our cost basis. But that's what it has to be, is just if you're willing to own it, know your break even and how to improve it. If I buy the Qs, I do not want to buy it at 484 and say that's my break even. If I buy it at 484, I'm going to add a call, I'm going to add a put, and if I'm right, it gets called away and I make, maybe $10, $15 a share, and I'll do the same thing. I'll add a call, add a put. Now this is a sell call and a buy put. So it's a collar trade. So that way I'm protected the downside while potentially getting the shares called away with gains. But I'm trying to finance those and maybe even get a slight, higher premium on the call side. So that's what I would be doing, is like, that's the campaign trade that I want to make sure that my overall position is not getting crushed. Because if we have some type of, I don't know, I mean, Qs look like if we survive this area here, Frank, I think the Qs are they have room to run. we get to this high again, we blow this high off, resistance here, resistance here. I mean, we could be talking 60 points higher, 80 points higher before I would say, okay, now I'm looking to get a little bit more bearish. So it's not a bad spot. I'm just thinking, if I get the stock called away, I'm just trying to make sure that there's more upside than downside. That's all. So, all right, man. It's 11:30.
Very crazy.
Yeah, it can be nuts, and it seems to be euphoric. I'd say, cautiously bullish. The market loves the melt up. Data is important. Today's consumer confidence, even though it was a terrible print, didn't really rattle the price action. It was kind of a nasty price action day. I mean, it's still positive on the week, but today did open high and then close below yesterday's low. So that was a pretty tricky move to test both sides, and price ultimately is going nowhere. So for me, for the ES trade that I have, I hope it goes nowhere because that's my profit trap. If it goes higher, that's fine. I'll keep the profit that I put on initially. If it goes lower, then there's some risk on the trade. But if it stays where it is, that could be a good day. And we'll come back and do it tomorrow.
Cool. Yeah, sounds good.
All right, dude. Okay.
All right.
Thanks, Frank.
Good luck today.
Thanks, dude. We'll talk. All right, see everybody. Thanks. Have a good day.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.